Hey there, crypto traders. Trader Dax here with another episode of Market Mastery. Just a quick update for you guys because there is an extreme volatility warning basically on the charts for tomorrow morning at 8:30 a.m. We have the CPI data being released. That's for New York time. In Melbourne or East Coast Australia, that's going to be 11:30 p.m. tonight. So pay attention to this video because I think it's going to be really important. The determination of this data that comes out tomorrow morning at 8:30 a.m. New York time, I believe is going to set the pace for the next FOMC or the next two FOMCs for sure, because we have a tight one in November, so November 2nd and then December 14th. So it's only really a month and a half, not even, that we have two FOMCs. So there's going to be two interest rates in a really short amount of time, considering some months we don't even have an FOMC at all. So, they can be almost 60 days apart sometimes, right? So let's dive in and have a quick look at the charts. Now, the thing to look at here, I think Bitcoin, it's right on range lows at the moment. And we have broken out of the long-term downtrend resistance from the previous all-time high, November 21st, right? So in a really interesting spot right now, being on support. Now, last time we were on support and, we sort of had CPI readings, it has helped to give us a lift off that support. And the same with SPX, which is also, pretty much at range lows. So this is pretty much the low that we had the other day, start of October 2nd, and we're pretty much just sitting on that at the moment. I mean, you could make an argument that this is some sort of a downwards channel at the moment, not really a falling wedge or anything like that, or a broadening descending. A break to the upside of this and then reclaiming the yearly low could send us back up to range highs. And I think that could possibly be the case. And, this puts in some sort of a double bottom that we have. It looks like a nice looking double bottom here on the daily. And, we range sideways for a little bit longer, maybe even come back up to test 3,900. Now, that is if we do have a lower than expected CPI reading. I'm expecting Bitcoin to at least come back up and retest this high here. Sorry, SPX come back up to test this high here at pretty much 3,800, right? And so what does that mean for Bitcoin? We'll probably get a rally up into this resistance level through here at 22,300, right? What it does from there, I'm not sure, but we could see a rally up like this, sweep of this high, and that'd be a really good short position to get in for the next leg down if we are to have that next leg down, right? So a sweep of this high here is an automatic short entry for me. And if I do have any long positions on spot and I see this sort of price action here, 100% every single time I see that sort of action in the setup or the environment that we have at the moment, I'm going to be expecting this to come back down to the range low. So I want to get a hedge in on that as quickly as possible with the stop loss above the highs here, right? Because we're in a downtrend, we sort of want to favor, shorting over longs, but it's hard not to, want to buy some Bitcoin at 19K just in case this ends up being the bottom and, this is just a really drawn out bleed, right? Now, if the market was going to play bullish, right, a really nice setup would be a break to the downside here, sweep these lows, right, from this point through here as well, get these wicks, get a whole heap of people to capitulate and then reclaim this level. That could be a position that I would be comfortable getting long on, and then my stop loss would just be below there, right? Now, we should probably look more at the downside because let's be honest, with everything that's going on in the world and also the PPI update that came out this morning in the US, that was a little bit higher than expected. We could be looking at some inflation for CPI maybe being a little bit higher than what's expected as well based off the PPI numbers today. Now, if we do have bad news, so let's go quickly have a look at so this is all the data that comes out, right? So tomorrow morning, 8:30 a.m., we're getting consumer price index month over month, right? And we're getting the core, right? But then we're getting, this is the main one that we want to be looking at, the consumer price index, excluding food and energy, which is one of the things that they call core as well, right? For September. And the month over month one is the one that they're following a lot more closely at the moment. The Federal Reserve is anyway, so the market will react more off that. So last month we got 0.6 and it was actually an increase from the month before. the expected was going to be a minus. So what we want to see in this month over month to actually be a minus, like a -1, right? A -1 or a -2 would be great. And then that comes down to, 0.3 or something like that. If this is higher than 0.5, which is expected, that's going to be pretty bad because there's going to be +2 or +1 or +2, right? I should say 0.2, not 2. I think you guys get what I'm talking about. That's probably going to result in us possibly moving into a capitulation event, which could result us in moving into a dump into FOMC. And then maybe, we see the Fed sort of put the clamps on a panic break on the 2nd of November. So that could give us, over 2 weeks, almost 3 weeks, basically into November 2nd. And that ultimately could be the point where the market puts in, at least a short-term bottom, and it probably takes a little while to roll over. Because after you have capitulation, right, we'll go have a quick look at that now, right? So let's just say we do get higher than expected, right? And we do get a capitulation event. It's probably going to bounce, and then, we get this sort of action, right? And usually you get 3, sometimes it goes 4 legs down, and, you get a really strong bullish divergence through there on the 4-hour, on the daily. And then you finally get off a key level, you get a strong reaction, and that sort of puts the bottom in. Then you probably get some sort of price action like this, right, over the next 3, 4, 5 months. And, that's an accumulation range. And then, we push up and finally break out, reclaim the previous all-time highs and this 19K level. And I think that would be a really nice bottom. And, I think you'd be crazy not to buy pretty heavily if we reclaim these lows after some price action like that. And obviously, it would take the Fed some time to pivot, and then, the economy starts falling apart. And they realize they're going to do QE again. We've already got multiple countries at the moment. I think 5 countries now doing QE already. Well, it's not really QE. They're claiming it's not, but it's pretty much the same thing. They're buying bonds. They're injecting liquidity back into the market, right? Which, to be honest, probably been sucked out a little bit too fast. But they actually do need the economy to crash a little bit. They need the markets to crash a little bit. They do sort of need something to break so that they can finally break the back of this inflation. And what's more important than inflation is inflation expectations, right? So these numbers coming in tomorrow morning are going to be super important. So the key ones are the consumer price index, excluding food and energy. They're the ones that the Federal Reserve look at. Most people will talk about, CPI, expected 8.1, right? That'll be the thing that they focus on. Now, this could be a little bit higher or lower, and that would change based on, fuel costs and the cost of food, which are known to be quite volatile, depending on weather or something like that. That's why the Federal Reserve, they like to look at things outside of food and energy because they're so volatile, and it can be so many different reasons, and it might not give the best inclination of if inflation is actually going up or down. So they're going to be looking at excluding food and energy, right? And year on year, so this one is 6.5 expected. Last was 6.3. So we want to see it lower than 6.5, right? That would be good. That could give us at least a short-term rally, right? Now, if it's higher than 6.5, then guys, we're in a lot of trouble, to be honest with you. And I think, to be honest, I actually want this CPI to be higher than expected so we can get capitulation and stop. I don't really want the market to do this and then just range sideways for a little bit longer and then roll over, and we just delay the rollover. It's going to annoy me, to be honest. I'd rather capitulation, like let's see the blood now. Let's see, the Bank of England blow up the bond market again. Maybe Japan capitulates and, the Fed has to bail them out, or, some crazy stuff happen so that things finally break, and then we can sort of go back to, okay, we've broken everything. Now we need to go back to fixing. And that can give us some amazing buying opportunities, not just in Bitcoin and other cryptos like Ethereum, Solana, stuff like that, but also in the stock market. That would be, for me anyway, that would be almost a dream come true at the moment, because I'm just sick of this extremely boring price action we've had now for almost a month. Like, prices hardly even moved. And it sort of does remind me a little bit of the price action back here in 2018, except this was much more of an extreme case. The volatility just completely disappeared. No one really cared about crypto at all. And then, one morning I woke up and this had happened. And this also worked in tandem with the breakdown of the stock market as well. It wasn't just crypto by itself. There was a few things going on, with Bitcoin Cash, etc. A bit of a scandal with that, and supposedly the founders were selling all their Bitcoin to buy Bitcoin Cash, etc., and dumping the market. But also at the same time, the stock market was having a bit of a breakdown through there. Also, so that is something to think about as well. Now, if we do have a breakdown in the stock market, because the CPI numbers are high, the key levels I'm looking for are 6,100. So 16,100, pretty much 14K, which is a monthly support level. And then there's a really strong weekly support level all the way down at 11,500, which I'm not sure we will get to because I think there's going to be a lot of buying through here. But you never know what sort of levels you might see hit in a capitulation event where the market's selling off really aggressively. A lot of people are getting liquidated, right? So that's something to think about. I don't really need to go into everything else because nothing is really moving that much at the moment. Like, this market is extremely boring. This looks like a bear flag on Ethereum. So I'm expecting this to probably break down if you're just basing on the chart. But let's be honest, nothing is moving really based on the chart at the moment. So it's all eyes on the SPX. Can this put in a double bottom tomorrow with a good CPI reading? We come back up here, which would give a rally and some life to cryptos, or are we going to get a higher CPI reading? Remember, we want to be looking at excluding food and energy and year on year, and the month on month one is the main one that the Fed is looking at. Jerome Powell said that multiple times in all of his speeches, right? So obviously, next level, if this does break down, is going to be this 3,400 level. I think that's going to be a pretty strong level. You see a lot of buying at. So we could capitulate down there and then, bounce around and chop for a bit through there. So, pretty much how I'm trading things at the moment is once stock market comes down here and puts in like a pin bar or something like this off this major support level, that's when I'm going to be going looking to buy some BTC. I will be, obviously, if we come down to these levels, anything below 14K, I'm going to be buying pretty aggressively as well. So hopefully that helps out for you guys. Leave any questions or anything like that you might have in the comment section below. Don't forget, if you like our content, please help us grow the channel and give us a like and subscribe, or share the videos with your friends. Thanks a lot for tuning in. We'll see you in the next episode.